Pulak?
I'm here.
Okay, awesome. Good to see you.
Hi, it's good to see everyone here. Glad to have an opportunity to be here right here.
Great.
So I just thought I would focus on just some new efficiencies that we're seeing in this space. So for example, what we're starting to see is a lot of new technology being built that continues to solve old problems. Now, this is something that I've seen spoken over and over over the course of the years, but what we're seeing is that there's an opportunity now that there hasn't been to create a lot more development more efficiently, at more efficient development costs. And so this is different. The cost to develop technology 3 years ago is much more expensive than what we're seeing today. And so I think it's worth looking, and I think we are looking heavily at a lot of early stage companies that are going back and saying, can we solve some of the older problems with some new technologies? And what I mean by that is, can we drive engagement? Can we drive user engagement to see if there can be improvements? I had the opportunity to invest in a company recently in the workforce space. It's a mentorship platform. This is a space that has been approached over and over and over again by corporations across the board. But if anybody has watched anything through the pandemic and the Great Resignation, workforce engagement has become one of the top priorities across every corporation. And software tools are definitely going to be part of that solution, but they need to be built in a way that drives engagement with the end user. And the solutions that we see that are utilized today by companies are not doing that. And so the companies that are being built right now, I believe, are lighter technically, and they're going to be able to start accumulating proprietary data on that engagement. Those are going to be the companies that I'm ultimately keeping a close eye on as the growth companies for the future. They're kind of subtle in how they're trying to approach those problems, but if they track that engagement properly, and we have the resources and the technology to do so today, that's going to propel those companies to actually create the proper products solving the problems more efficiently. But again, I want to focus on this cost to structure a startup. I apologize for that, because it's also come down with a lower development cost. You have no-code solutions across the table, and this is creating an environment where just about anybody can go and create an idea and create a solution at a far less cost than available. And what does this mean overall for the market? I also believe that we're going to start to see more efficient forms of funding in early stage technology companies. It's a highly illiquid, highly inefficient market. You cannot understand what may or may not be going on in those markets early on, or at least the traditional landscape is. But more and more, I'm starting to see these companies go to crowdfunding platforms, for instance. It's interesting, because before you may not have seen companies that may have had reviewed, audited financials. These guys are going out there and saying, I'm ready to prepare on and to raise on a public market. I believe that this and other fun work that I'm doing is going to continue to create that overall higher efficiency in early stage investing that can continue to create more and new value opportunities, not just across stages. We're talking pre-seed to seed. I think those barriers are going to continue to decline. I think the definition of what we even call it, I'm going to throw an anecdote in there because I heard somebody talking about it earlier. For the gender lens work I do, I often hear women who are generating revenue, women who are CEOs of a company generating, they often say, oh, we are pre-seed. And often, when I hear pre-seed, I think of a concept, I think of a spreadsheet, I think of an idea. If you're generating revenue, that's a pretty further along than what one might conceive. And so what I'm driving to say is that these greater efficiencies within the market, it's going to reduce those barriers across stage, but also across asset classes. I'm seeing a lot of opportunity to be looking in technology, but seeing how technology can be used with other growth classes, such as real estate.
Great, and I appreciate you just jumping right in there, but I have a place marker to Harjeet on that stages and blurring and how things are happening, so I don't know if you're on, Harjeet. But first, let's let you, and maybe Pulak, you could, because you're a little broader, you're both a technology platform and you're talking about asset classes, and then we'll turn to Anna. Here's some mics. One, two.
I'm sorry, I didn't hear that.
We're going to just pause on that, Bonnie. We'll come back to you in a moment. Just going to let the panel roll through here.
Okay.
So I'll take a quick minute to introduce myself and the space that we are in. So we are in the asset tech space, in which is very close to almost everybody here. And asset tech is one of the vertical silos in the FinTech world itself. But we are taking a different view of it, and why we are taking, and what is it that asset tech will bring to this whole market. Just as a brief background, I've been in this business for the past 25 years. I was a founding team member at GSO Capital, which was one of the earliest credit funds, spun out of Credit Suisse. Went on to become one of the biggest or largest credit funds. It's part of Blackstone now. And a thing that we realized, and it kind of propagates across the illiquid or private capital markets, was that the private capital markets in one way differed very much from the public markets. And the big differential was the public markets had been designed to be or to move towards something like a straight-through processing. So everything used to works there. The private markets, there was nothing equivalent to that. So they were highly fractured. The data was all over the place. The systems were not there. The processes were not there. And we were constantly struggling to build any kind of scale as we were building our system while we were at GSO. And scale comes to anything. What is in the deal pipeline? Or what is our liquidity currently? Or where are the valuations? I mean, these are all questions that every manager who's in the public or private markets is asking, but they don't have a clear answer. And how do you manage all of these different questions? There were no good solutions. There are still no good solutions. So one thing that we had discussed, and we worked on it quite a bit, was what is it that makes you efficient? And at that point, it came down to what everybody knows. We looked at the assembly line model, and we said assembly lines were designed by Ford, but they are still being used by Tesla or by the chip manufacturers or almost everybody. How can we design systems which look more like assembly lines, especially in the asset tech world? As data flows, can we think of it like an assembly line and build systems around that? And these are essentially going to be the platforms of the future. So private capital markets did not have anything like this, and that's what we have started building out, and we have put together many pieces of it. There's a ways to go, but that's what we are doing. And platforms are going to be the future in many ways. Yeah.
And you're going to switch gears completely in a way. So, in fact, your career is sort of parallel pathing, switching careers. I'm so intrigued by what you're doing.
Hi, can you hear me? Yeah. I actually have some slides. I don't know if anybody kind of picked up my slides, but that's fine. I can go without them.
I'll try to wing it here. Go.
Sure. Well, so my background is actually hedge funds, and what I focused on most of my investing career was special situations, contrarian situations, value investing, and essentially picking up on niches where few people are looking. So me and my hedge fund partner are doing exactly that. So we're not looking at it as a career switch. We're starting a company, a tech company, and the platform is in the audio space. So we're not talking about metaverse. We're not talking about, Mr. Sugar Mountain announcing that we're going into video. We're actually looking into audio, which we think is a great niche, which we think is unexplored. Very few people have actually tried to create, a platform out of it and make something that is revolutionary. So we think we have something. And what my slides were on actually what is happening in spoken word audio, and that is spoken word is anything that's non-music and non-video. So we're talking about radio, we're talking about podcasts, we're talking about things like streaming radio. And there are two trends that are happening there. The first trend is that people are listening to less music and more podcasts and more spoken word. So that's a huge trend happening in the past 7 years, huge shifts there. The second shift is that in the spoken audio universe, people are actually listening to less radio. They are shifting. The share of radio in the past 7 years has fallen from about 80% in spoken word to about 48%. That's a huge shift towards podcasting, towards audiobooks. That's not my slide, that's my pitch deck, but that's fine. Yeah, that's great. We see lots of problems that nobody has solved so far. To talk about the size of the market, podcasting market is about $1 billion in ads, about $11 billion if you're looking into subscriptions, everything, the whole universe. And $100 billion if you're looking to spoken audio, which includes radio, right? So if podcasting is taking share away from radio, then we're looking at a potential market of $100 billion, which is already substantial. Then we're looking at a $1 trillion market, which is video. And just to give you an idea, today people, daily listeners of podcasts, it's about half of the US population over 13, they spend 2 hours and 6 minutes on average listening to spoken word, which is found fascinating. So we think that that's gonna increase because they spend much more time looking at videos. So we think a $1 trillion video market, spoken audio is gonna cut into that as well. So what we have, the problem that we're solving is we're an interview platform. We think we can scale this to a large percentage of the podcast. We are solving a problem of extracting person from audio. A person, we're indexing podcasts, we're indexing audio content by person. Nobody else is doing it at scale right now. We're doing it. We think not only we're going to be able to index, that's one part of the innovation, but we're also going to be attaching to a lot of the personal branding, revenue monetization opportunities to a person in spoken audio, in spoken word, that nobody else is doing right now. So the platform is called Padverb, and we have just launched a self-upload product where we let people upload their own interviews. We let people interview anybody. You can interview anybody in the room. You can do it in MP3 format. You don't have to do it as an RSS, real simple syndication. You can index it to your guest. And then you can personal brand yourself. You can do LinkedIn, you can do anything you want on all of the social media platforms. We have our own player. We have just closed our friends and family. My hedge fund partner and myself are funding this. We have just closed our friends and family. We have launched 2 partnerships, one with an NBA star and one with a Broadway production company. And we are less than 6 months old. We're looking, if anybody's interested, for indications for pre-series A, or post-seed, or whatever you want to call it. So that's the opportunity in spoken word audio. Thank you.
And if you could introduce yourself, because you wear 2 hats.
Sure.
You're doing deals on behalf of your family office, and then you've hatched this baby, right?
Yeah, so I'm Aaron Hatton. I represent represent a single-family office based in Southern California. The family's created and invested in and I guess advised technology companies for the better half of the last century. And the principal right now is the principal is running a family office and also working on our new operating company. So when we thought about structuring the family office in 2016, he wanted to make it so everything, we would say one of our themes is like that technology is outpacing human adaptation to learning about it. So the way that we've developed the family office is open APIs, SDKs, everything is, I guess, digital. And that's what I'll talk about today. So this is one of his slides, and he probably does a much better job at presenting it than I do, so you got to bear with me, but okay. So how to thrive as a family office in exponential digital times. So our key themes are the fact that technology is outpacing its human adaptability. As you can see, the learning curve hasn't caught up to where the technology is today. So if you look at where we're at today, the year 2020, we believe that if we think about artificial intelligence and the fact that humans are usually poor substitutes for robots, that as of today, we can simulate one human mouse brain with every piece of artificial intelligence that we develop. So we'd rather use technology to do the mundane work and let human minds flourish and be creative and thoughtful, as to what they were built for. An example of this would be how Huang's law has outpaced Moore's law. So this is something that we talk a lot about. NVIDIA's actually just became the 7th largest company on the S&P 500. So some of our themes in the family office are the rise of decentralization, the great wealth transfer, obviously the rise of alternatives. We think that our advancements in AI and machine learning have brought us into the 4th industrial revolution. And then the 3 laws that we always keep in mind are Moore, Wang, and the Metcalfe law. You can see an example of here today in 2004, the top 10 companies by market cap versus today, and how most of which are shifted to technology. And then this is just an example recently to reinforce the trend. It's got like 2 more. So Sky and Ray, we were founded in 2016 by Michael and Camille Sikorsky. Our expertise is in FinTech, wealth tech, machine learning, mobile, and design. The family office was originally inspired by David Swenson in terms of our portfolio construction. And then kind of our thought process is, what does that mean? Heavy alternatives. We think that, so we're designed to be a digital family office. Artificial intelligence first, we're building everything with open APIs, and then written culture is important. So we're using technology to document everything from day one, so as we grow, kind of the themes and thesis won't be ignored. And then the new operating company is a business called Copy Wealth Studios, and it's a mobile platform that allows families to preserve, grow, and validate their wealth.
Okay, so any questions from, you've heard of, tech media world, where I sort of completely messed up her presentation, but she overcame that.
Hey, Mark.
Yes.
I got a quick question, maybe for the coaches.
Yep.
Thanks. From the last presentation and maybe from the GSO side of things, can you speak a little bit about greater cyber and heightened cyber protection to this? Because, if you're dealing with some of the ultra high net worth folks, there's an expectation for for that barrier. What are you doing to deliver that on service?
We use Amazon Web Services for each family. Sure. So we use AWS. So each family can be set up in the way that they want to be, but we through our due diligence and the team's experience having decades in technology, we rely on Amazon Cloud right now. Each family would get like an encryption key. Their attorney would get an encryption key. They'd be set up and go through like the protocol to get their data in. And then once they're into the system, we use biometrics to log them in. And then on the back end, no like concierge or client service person sees their data unless allowed access to.
Yeah, cyber is actually one of the most important pieces of data that you are putting together, and this is across whether it's family offices or it's funds or asset managers. All of them are looking for very, very high level of security. So there are a couple of pieces to how we look at cyber and how we manage it. The first is external people trying to get into the system, and that's where, like he mentioned, it's an important part where either AWS or Azure or in their security and the way they have encrypted things and the way they allow you to allow access into the systems. They provide a number of levels of security, and it's up to the developers and the intelligence of the developers to take advantage of some of those cybersecurity services that are provided by both AWS and Amazon. But then the second and important part also is, what if somebody is trying to somebody internal is trying to get into the system, so or somebody internal is trying to download data which he's not supposed to have access to. So again, you design systems where access is very well controlled, and you can monitor who is doing what at any point of time. And our systems have been created in such a way that if somebody, for example, just is trying to download the entire investor list of at an asset manager, this will be immediately stopped. And so you have to design your systems internally also to be able to take advantage of some of these some of the features. The other part of it is internally also. I mean, the biggest hacks that come is because of somebody has lost their password, or the password is easily traceable. So there, I mean, multi-factor authentication has become a big deal. It's a very, very critical piece that goes into it. But then IP tracking. There are so many features that are being that can be incorporated into the design, that you can really stop malicious folks getting into it. And finally, sorry.
You said finally, so I'll give you the final.
Yeah.
Go.
Yeah,
Go.
and then finally, there's one last thing which people don't realize quite a bit, is data which is in transit between AWS and in your system. And again, you should have your HTTPS encryptions and all of that in place. So all of those things you have to put together to put a proper security protocol.
So two things. And you're going to stay around for the consumer panel. So that's where we're going to make up everything. I'm going to find your deck too. But Hamlet, as a cybersecurity fund investor, he invests in funds and directs. So I just said, step in. If you could grab a stool. The question is, I think from Rob, is, okay, it's great to optimize your data, but what about the cybersecurity aspects, broadly speaking? So you heard their perspectives. What are your perspectives?
Thanks. Real quick, Hamlet Yusuf. I run a venture fund. We focus on national security, defense-related technologies. So cybersecurity is a big area of what we invest in. The importance of cybersecurity, this probably talks a lot of stuff you all talked about earlier, is traditionally, when you looked at hacks and compromises, the hackers, whether they're hacking syndicates or if they're state-backed entities, they're going after Microsoft, they're going after CIA, they're going after the State Department, they're going after big corporations. What's changed over the last several years are starting to go after what we call soft targets. Targets that don't have the resources, the infrastructure, and the layered approach to protect their equities. So what's happening is if you have a group of Russian hackers or Chinese, North Korean, or Iranian hackers, their day job is to attack national security interests in the US, the UK, the West, or elsewhere. They're using state-developed tools to unofficially target valuable assets. At night, they can do whatever the hell they want. So the Russian government will look the other way, or their overlords will look the other way, and they can use that same infrastructure to go after an easier target. Well, what's an easier target? Family offices, law firms, accounting shops, small, mid-sized enterprises. Those are becoming more and more high-value targets because they don't have the infrastructure, they don't have the best practices, they don't have the best training in place. They become an easy target. So me as a hacker, my job is to steal national security secrets. I can make up my side hustle by hacking an enterprise or entity or family office and getting away with whatever I can get away with, and I know my overlords aren't going to do anything about it. So having the right layered security, I think, is critical. This is something you don't learn by going through a couple of seminars. I think you best bet is to understand what that right what that right tech stack looks like, and make sure you have that to protect your interests. So.
Can I answer that question too, real briefly? Sure. Yeah, so in response to Russian hackers, we have a team of Russian PhDs, and we're doing everything on our servers. So we're trying to create an in-house solution, but for more commodity type and data-heavy things, we're going to use AWS as well. For example, for speech-to-text, we'll use AWS, which is expensive but necessary.
Any questions about the sort of technology, the companies that they're working on before we switch to consumer? Yeah, Greg?
So I have a question on the audio project. You mentioned music is now second to spoken word in terms of people's interest. Do you have a categorization of what spoken word people are flocking to in terms of what are the topics of interest?
Yeah, I actually do. There was an NPR research that just came out, NPR Radio and Edison Research, and I can remember from memory. So about 60% of people are interested in engagement and connection, so anything that has to do with mental health, like connecting with other people, which is the, I guess, the pandemic, the side effect of the pandemic. About the same, 60%, yeah, here you go. Self-improvement, 60% of podcast listeners. Encouragement and positivity, 57%. Education, 46%. And unique perspectives, so 60%. So this is what I've just mentioned is among younger listeners. The general population is interested, like in the majority, like these primarily have to do with like younger, less than, let's say 45 listeners, and the general population has a variety of different, crime. True crime is a big thing. Interviews. Now we are an interview platform. We think a lot of the sectors are covered by interview format up to 75%. We are not necessarily two people, but we want at least a question and answer, so maybe two co-hosts, one guest plus 1 to 3 to 5 guests. That's 75% of the market. People love interviews. That's why it ties very well with unique perspectives, especially the 60%. Yeah, that's a great question. So Clubhouse actually has been part of the reason that spoken word audio is gaining market share. The overlap is that Clubhouse right now, the way they are now, they're so-called ephemeral content, right? The content is presented in group chats and then it disappears. However, Clubhouse has just announced at the Wall Street Journal conference that they are moving into recording what was said. So the feature is replays. They're doing a podcast feature as well. but we don't think that, we're competing with them. We think we are very unique because we attach a person to audio, and, they're doing it in a slightly different way. Not everything is going to be replayed and put into real simple syndication. There's a lot of copycats right now to Clubhouse as well, including, Facebook is coming up with something, Twitter is coming up with something. So it's a different format. It's nice. It has its challenges, but it's different from us.
Just what the world needs, another social network.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.